Welcome back to Nurse Money. Let's jump right into today's explainer because we are tackling a massive topic. We're diving headfirst into the highly complex and honestly, sometimes downright confusing world of travel nurse taxes. Look, if you're already out there traveling, or even if you're just thinking about taking your first contract, you are exactly where you need to be. Our goal today is super simple. We want to stop you from inadvertently leaving your hard-earned money on the table, and more importantly, keep you completely off the IRS's radar. So picture this for a second. You just wrapped up an absolutely killer travel contract. You are pulling in fantastic money. We're talking maybe 3, 4, even 5 grand a week. You are feeling on top of the world about your finances. And then, bam, tax season hits. Suddenly, you're staring down the barrel of an IRS bill for $15,000 or $20,000, and literally nobody warned you this was coming. Now, I am not trying to scare you here, but this is a very real, incredibly stressful scenario that hits thousands of travel nurses every single year, simply because travel nurse taxes are a completely different beast than regular staff jobs. Unfortunately, a lot of people just find out the hard way. But not us. Here is our roadmap for today. We'll start with the unexpected trap, then we'll break down the tax home rule, cover the 5 costly tax mistakes, look at maximizing your deductions, and wrap up with your action plan. Let's demystify this whole thing so you can take total control of your money. All right, Section 1, the unexpected trap. Regular versus travel pay. We really need to understand exactly why so many travelers find themselves in hot water with the tax man in the first place. It all boils down to how we get paid, and it's actually pretty fascinating. See, when you're a staff nurse, life is easy. You get a single taxable income, your hospital withholds the taxes, they send it to the IRS, and you file a simple return at the end of the year. Boom, done. But as a travel nurse, you get split pay. It's like a 2-part harmony. First, you've got your standard taxable hourly wage. But second, you get this massive, non-taxable stipend for your housing and meals. And that stipend is the real game changer here, because it can be an extra $1,000 to $3,000 a week completely tax-free. But you knew there was a but coming, right? That generous stipend is only tax-free if you legally qualify for it. Which brings us nicely to Section 2, the tax home rule. This is literally the #1 concept you have to grasp if you want to keep that stipend money tax-free. Okay, so how does the IRS actually define a tax home? Well, it's a permanent residence that you maintain, you pay fair market value for, and you physically return to between your travel contracts. Essentially, it proves you are duplicating your living expenses by working away from home on a temporary basis. If you don't have that documented tax home, like say you sold your apartment to do the whole van life thing, or you're just bouncing from contract to contract full time, the IRS can swoop in and reclassify your entire housing and meal stipend as taxable income. All of it. And that right there, that's exactly how those terrifying $20,000 tax bills happen. So let's talk about how to protect yourself in Section 3, 5 costly tax mistakes. We're going to navigate this IRS minefield together. I really want you to stop and ask yourself right now, am I inadvertently risking a massive audit by making any of these errors? Catching these things today could literally save you thousands of dollars. Mistake number 1 is the absolute most expensive trap of them all, faking a tax home. Look, a simple P.O. box is not going to cut it. And moving in with your parents and just using their address, that doesn't count either, unless you are actively paying them fair market rent. You have to be paying real rent or a mortgage, keeping your belongings there, actually returning between assignments, and most importantly, you need the paper trail to prove it. Then we have the other 4 huge traps. Mistake 2 is the wrong tax withholding. Since so much of your pay is that non-taxable stipend, your agency might actually be under withholding on your taxable hourly rate. You gotta check that with your recruiter. Mistake 3, filing in only one state. Guys, if you work in multiple states, you have to navigate multi-state filing rules. And yes, that applies even if you're taking contracts in zero income tax states like Texas, Nevada, or Florida. Mistake 4 is using a regular, run-of-the-mill accountant. Travel taxes are basically their own language. A regular CPA might not understand tax homes or multi-state stipends, which means you'll either overpay or risk an audit. You need a travel healthcare tax specialist. And finally, mistake 5, not keeping your receipts. Housing, utilities, leases, save them. A shoebox full of faded gas receipts is not going to save you in an audit. Just make a Google Drive folder on your phone. It literally takes 5 seconds. All right, let's move on to the fun stuff in Section 4, maximizing your deductions. This is all about keeping more of your hard-earned cash. The silver lining here is that there are completely legal ways to lower your tax bill. First off, multi-state licensing fees. If you're paying for licenses across the country, those are often deductible. Then there's continuing education, any courses or certs you need to keep that license active. Third, professional and union dues. Fourth, your required scrubs and uniforms. If your hospital makes you wear a specific color and doesn't reimburse you, write it down. And fifth, a home office deduction, which is super relevant if you do telehealth or heavy documentation from home. Now, a quick disclaimer, tax laws shift all the time, so you always want to run these by your specialized travel nurse tax pro before claiming them. Let's bring it all home with Section 5, your action plan. Here are the 6 steps to build your financial protection. Think of this checklist as your absolute financial shield. Step 1, establish and document a legitimate tax home immediately. Step 2, get on the phone with your recruiter and understand your exact pay breakdown. Step 3, this is crucial. Automatically route 20 to 25% of your taxable wages into a separate savings account every paycheck and do not touch it. Step 4, use that money to pay your quarterly estimated taxes in April, June, September, and January so you never fall behind. Step 5, hire that specialized travel tax pro. And step 6, track every single work expense and housing receipt like your life depends on it. Honestly, if you follow these 6 steps, you are completely taking the wheel on your financial future. So I'm going to leave you with this one massive, incredibly important question. If the IRS audited you tomorrow, would your current tax home actually survive the test? I want you to look at your current contract and your living situation the second this explainer is over. Make sure you aren't leaving yourself exposed. Travel nursing is seriously one of the best ways to build incredible wealth, but the nurses who truly come out on top are the ones who treat the financial side like a business from day one. Get your paperwork tight, hire a specialist, and keep your money where it belongs, in your bank account. Thanks for hanging out with me for this explainer, and I'll see you on the next one.